Welcome back. Now, I will show you how to read highs and lows on the chart. When price move forming series of highs and lows, low, high, low, high, low, high. This is an uptrend. This is a trending market, a very bullish one. Now, another time again, price move forming lower lows and lower high. That's a bearish market. Low, lower high, lower low, lower high, lower low, lower high, lower low, new high, lower low, lower high, lower low, lower high. The point is, for each of these lows, the new low is always lower than the previous low, and the new high is also lower than the previous high. This like as if you are coming down through a staircase, while an uptrend is like you are going up through the staircase. It's as simple as that. Now, but for a ranging market, it's as if you are on a flat surface. Price just stay around similar price levels with very little difference. This is a ranging market. And now in trading, you want to avoid this kind of market as much as possible. They are much more harder to trade and they don't give good profit like this trending market like this. So how do you read highs and low? Let's start. This is a low. When you look around it, the lowest candle here, the lowest low is this candle, this single candle, right? Now, this is where the low was formed. Now, when you look back, the highest high for that retracement is actually this high here. So this is our high. When price broke this high here, that is when a new high was formed here. So now we have a new high form of this high, and this become our low. Now this from here to here is our trending range and is a bullish range. Now we actually having here is a retracement of price. So when price retraces, we'll be looking forward a chance to buy for a long trade. That I'll be looking for because we have a bullish trading range. These are trading range. Let me give you an example again. Starting from the beginning. When you look here, the lowest low is here. This is the lowest low. This is the most recent high. Is here. Now, this is a range, high and low. And it's a bearish range. Each price retracement to be looking forward for selling opportunity to sell, which did happen here, but it never hold then price went up, broke this high and closed above it bullish here. Then we have this. Then that changes things to that this become our high, new high, and this is our major low, right? Which means that until price break this low, we are still bullish. No matter what happen around there, we are still bullish. Now, the easiest to actually read this is to use candle by candle basis, which we have. When you look at it, when you look back from here, from this eye, no candle's low was broken and closed below by any candle until here. So then price broke this high again here. Here, and also broke this black candle low and closed below it here. So this become our new range, our new trading range, high and low. This is now our new trading range and it's a bullish range. So the price will trace back to this range, be looking for buying opportunities. Now price will trace and then broke this low here, but went up again, back again. It never closed below this low. What does that mean? It means that we are still bullish. What happened here is just a liquidity sweep. Price took out this low. Why? To reach this key level here, which is an imbalance. Price kept deep into this FVG or imbalance, drop inside of it, also to retest this old high here as support, and I went up again. So price is still bullish. Okay, price is still bullish. So it reversed back, closed back within this range. That means this range still stand. Then price went up, took out this old high, closed above it, went up again here, and now this become our new range, our new high. Where's our low? Our low is here. These are now our new low. Now become low, higher low, high, higher high, higher high. Why is this our low? This candle long wick low, because when you look back, the previous candle before it, which is this, closed below this down candle, and this candle also closed below the low of this. If none of this candle closed below their low, this will still remain our low, our new low. Now this candle broke this low here, but it never closed below it, so it does not change anything in terms of structure. This is our major structure that is so clear and so smooth to see, right? Then price retrace here. They went up again, broke this high, but never closed above it. It just retraces back again. It retraces deeper now here. Then went up again, then broke this high and close above it. Now what happened here is what we call range market. It was a pure range. Price was stuck around the same price range level until this high was broken here and the price closed below it. Then we then had a new high here. Then our new low become this. This is a low that led to this massive move. This is the last major low that began this massive move of this new high. Then price broke this high to here, closed above it, then went up massively. So now, what's our new low? If you look back, our new low, new major low is still this place. Because none of these candles low closed below the previous low, they just wick through the previous low. So the major low is still remain this low. Alright? Then price drop a little bit down, then range. Within this range, just range there, just range. So this is a ranging duration period. Right? Then price went up again, broke this high, and then closed above it. Now, what's now a new low? We will look back. Where is the major low with body candle close below the previous low? Is this. These are new major low, higher low. These are new. So now this is our trading range. And in this trading range, we're looking forward purely buying opportunities to buy. If price closed below this low, then this whole thing has now become bearish. Should be looking for bearish sell signals within this bearish range. So this is how I read price. Now price retrace here and I broke this high now. So now this become our new high. What's our major low? Our new low now is this low. This is the last low where they had the body close below the previous low and the price went up. Now this is now our trading range, and now we are simply looking for a buying opportunities within this range. So what happened here is just a retracement for price to continue moving higher. So this is how I read price. This is how to read market structure in a more precise and efficient way. All what happened here is just a retracement plus ranging moves. Nothing here altered this whole bullish price movement. Nothing here altered it. The arrangement still remain bullish. Alright, now let me give you a bearish example of this. I just showed you now. Is this? I use this one. So this was the high, the last major high, and this was the low, last major low. Price came down, took out this low here and closed below it. Then this became a new low. When this happened, price has now turned to a bearish structure on this time frame. So now this has become our new range. Now where's our most recent high? We had it here. So it was a high that led to the breaking of this low. So this become our trading range. Why? This green candle body closed above this black candle here. It closed above it. So this become our trading range, where we're looking for bearish selling opportunities. If price close above here, this high, then price will turn to bullish again from our perspective. Now price will increase a little bit, drop again a little bit again, then went up again, creating a new high within this range. But remember, these are major range. These are our main range. So we are still bearish. This is just our market manipulation and liquidity strip to deceive folks into buying long because of this change of structure here. But the major range, which is the major high and low, were never taken out by price. So price is inside this major range. So these are major structure. Now what happened here, this high and this high that happened within this range becomes a minor structure. This is a major structure and this is a minor structure. Now there are ways to trade the minor structure too, which will be addressed in future videos. Now price broke this low here, close below it, right here. And this was a low. When you do that, the changes now becomes a new low. Now what's our recent high with body close? It is here. This is our high. This is our high. You can see it clearly, so clean. Now this also becomes our new trading range where we'll be looking for sell signals for heavy pullbacks, and it happened here, price pullback to this imbalance and then it sold down to creating a new low here. That was our most recent high that led to this low. It's actually here. This is it here. Now about this is just a minor move because none of this here broke this low onto this candle. So these are just minor structures within major structure. Now it was when this high was broken that price then turned to bullish that we're going to look for buys on this time frame. So this is how I read market structure in a very precise manner, an accurate one. So when you begin to read market like this, you become more accurate and more precise in your approach to the market. I know that this may not be clear to you now, but as you progress in this video to cover other topics, you're going to begin to see things clearly in a more clearer light, and the whole thing start taking shape and form in your heart, and you begin to understand them better. So see you in the next video. Thank you.